This house that you guys are looking at right behind me is basically the median price home here in Albuquerque, New Mexico. This house is listed at $329,000 and the median home price in this area is $322,000. So right in line with that. It's a pretty new listing. It'll be interesting to see how long it takes for this property to sell. But one thing that's interesting here about New Mexico, you can't see what this property sold for because they actually bought it in June of 2022. So it's basically a flip and we don't know how much they bought it for. And when you look at Redfin, it says that in some states a property's sales price is not public record. Now I've never actually heard of this before and I haven't encountered this problem until right now here in New Mexico. And I remember when I was in Las Cruces, New Mexico, I was able to see the previous sales prices of properties. So maybe it's just something to do with this area. But one thing that makes it tough for anybody looking to buy a home, say you want to go look at this home and you're interested in buying it, not knowing what the previous owner paid for it makes it very difficult for you as the buyer to assess what you should actually offer and what's a fair price to pay for a house like this. And I even use my MLS tools as a real estate agent to pull up the actual tax roll. Can't find anything, guys. There's no public information about how much this home sold for. And I checked out a few other listings to make sure it wasn't just this one. I can't find anything like that. So only the local MLS here probably has that info because I don't know how else local real estate agents would value properties if they don't know what things are selling for. So very interesting to see that. And you guys want affordable, this is affordable, okay? This is about as affordable as it gets in most of the country. And you can own a house like this for like $2,300 a month, all in on your house payment. And one thing that helps you is the property taxes here are very low, guys. On this house, you're looking at about a $2,300 per year property tax bill, which isn't bad at all. I just wish that the cost of living could be this low where I live, and that would just be fantastic. And this seems like a pretty decent neighborhood. Never been to this area before, first time in Albuquerque. And you know, I haven't heard good things about this place, but being here in person and being boots on the ground and walking around, it seems pretty okay to me. You still have like homeless on the street in some spots, you know, people begging for money and things like that. But you see that kind of everywhere out here out west, I feel like. Now I want to talk about my home state of Florida a little bit because there is a new development when it comes to homeowners insurance. And you know, one thing we've all been hoping for as homeowners there is whenever we get more insurance companies coming back into the state and willing to write policies that hopefully will bring the rates back down to reality to where people can actually afford it. Well, there was a new report today right out of the Florida Realtors newsletter that I get every day talking about how that might not actually be the case. And what it's saying is that the new laws so far have done a good job at lowering the amount of litigation involved when it comes to these insurance companies. But now they're saying even though litigation is starting to go down, that insurance rates in Florida are likely to still continue to go up due to the rising inflation, rising reinsurance costs. Of course, they have to name climate change as one of the reasons, and they're saying these are all reasons why insurance rates in Florida will continue going up even as litigation goes down. Now, already I feel cheated as a Florida resident. Somebody that lives there was looking forward to seeing rates come back down to reality. Now that more insurance companies are starting to return to the state, they used to say that fraud and litigation was the #1 reason why we had such expensive insurance in Florida. And now they're changing the tune to now it's climate change, higher reinsurance costs, and inflation. So it just seems like to me at this point, no matter what happens moving forward, that there's going to be excuses for insurance to be expensive, guys. And if you think it's just going to be in Florida, just wait, because it's hitting other areas too. Louisiana's having problems with this. Colorado's having problems. California's having problems. And it's going to spread to other states. One thing you can tell from what these insurance companies are saying is that they don't want rates to be lower, okay? They don't care if your rates are lower. They're going to find other excuses to keep them higher now that they've been able to keep them higher for longer, because what kind of business would want to make all this money and collect all these premiums and then say, oh no, we're going to lower it now because the new law is starting to work? I guess we were all sold a bag of lies on that one. Now the company that is coming out and saying that rates aren't going to go down is called Karen and Clark Company, and they provide risk assessments with models that cover earthquakes, hurricanes, wildfires, and floods. in 50 different countries across the world, and they're the ones who are saying that rates are probably not going to come down due to all of their risk modeling. And even their own report says that litigation has significantly contributed to the cost of insurance in Florida over the past several years. In fact, when there's a hurricane in Florida, the amount of litigation claims was typically 10 times higher than what you would see in other states when they get hit by a hurricane. And so they're saying that it basically contributes to having anywhere between 30 to 50% higher amount of claims than you would see in a different state getting hit by a similar storm. Now, in case you didn't catch what I said earlier, we are in Albuquerque, New Mexico today, and my first impressions of this place are actually that it's not so bad. The weather here today is pretty pleasant. It's like in the mid-70s, sunny, feels pretty good. Doesn't feel dangerous, at least not where I'm at right now. Maybe that's different in other areas. But I'll tell you what, man, I definitely like it so far much better than Las Cruces. That's a place that I hope I never have to go to again. But over here, it's not so bad. And basically the reason I want to bring this up, guys, is because anybody who's banking on the fact that homeowners insurance is going to go down after the legislation that we received last year, don't count on it. Because basically it sounds like it's never going to go down. If it does go down, it's probably not going to be by the amount that you want to see it go down by. And so this is important because anybody who lives in Florida now or who's considering moving to Florida needs to be aware that this is going to be an ongoing expense that's probably just going to continue to get worse over the years because the insurance companies have basically condemned our state. I understand that we do get hit with more hurricanes than any other state. That is true. But that's always been the case. It's not like that's a new thing. But what is a new thing is the amount of people living in harm's way, essentially. Because with all the new construction we've seen in Florida and how many people that have moved in over the past, say, 5 years has been tremendous. And the more people that live in harm's way, then every time there is a natural disaster, the more insurance claims you're going to see, the more property damage there's going to be. And with the higher labor costs and the higher cost to rebuild, that's what's contributing to the extra amount of money that insurance companies have to pay out. Because just the replacement costs alone between 2019 and 2022 have gone up by 55%. And that's something that's outside of insurance companies' control. And I get that. But the thing is, we were promised that insurance rates were likely to go down once they changed the laws and once more insurance companies come back into the state to offer more competition, which maybe it will still happen, guys. We'll find out. Who knows, if that's going to be the case. If we get enough insurance companies coming back, then maybe it's possible. Maybe we'll be able to see rates go down by 20%. But who knows? The point is of this video is I wouldn't be counting on that. From this moment forward, you can probably count on your homeowner's insurance going up at least 10 to 15% per year from here on out. So you've been warned, guys. If you want to move there, that's the situation. If you already live there and you feel like you can't afford it, it's already too expensive, maybe it's time to think about moving out. Now, one interesting trend we're starting to see just this week here in the housing market is the amount of people who are applying for adjustable rate mortgages just went up about 15% from the previous week. Now, it's not like these numbers are skyrocketing, but what it's telling you is that anybody who's interested in buying a home right now is willing to do whatever it takes to get the lowest possible interest rate on their mortgage, including applying for an adjustable rate mortgage. And man, does that sound familiar? Does that ring a bell of a time in history? Oh yeah, 2007, 2008, when everybody was doing that, thinking that nothing was going to happen, there was going to be no crash, and in a few years, I'll just refinance. That's the attitude that everybody takes when they go for this type of loan, because you're essentially betting that when your adjustable rate mortgage actually adjusts, then you're going to have a lower interest rate than you signed up for initially. And I can see the appeal because mortgage rates went down slightly this past week, and the previous rate for an adjustable rate was 6.5%. Well, now it's down to 6.33% versus close to 8% if you're getting a 30-year mortgage. So it can save you significantly on your monthly payment, and people are just betting on the fact that they're going to be able to refinance. And this is such a popular trend among today's home buyers that adjustable rate mortgages now comprise 9.2% of all mortgage applications. And what this tells you is that people who are buying homes today are continually willing to take on higher and higher amounts of risk to get into a property. They're buying the home at an all-time high price. They're buying at decades high interest rates. They're also buying it with an adjustable rate mortgage, hoping to be able to refinance when the time comes. Those are a lot of bets to be making when purchasing a home, which is supposed to be a relatively safe investment or asset for many people to buy into, because you're supposed to live in the home for 10, 15 years, and then when it's time to sell it, you'll have enough equity and you can pour that equity into a new house. But the way people are thinking about buying a house today is nothing like that. In fact, it's more just like the FOMO mentality of let me get in right now and I'll worry about all the consequences of stuff like that later on, which I think puts people in a very dangerous position, because when you take on this level of risk when buying a home, especially if you're a beginner, guys, you can really be shooting yourself in the foot, and you can delay your financial life and put yourself into ruin for years to come into the future if things go south for you. And here's the problem with this method of getting the adjustable rate now, is even though rates may actually be lower in a few years from now when it's time for your mortgage to readjust, the problem is you most likely will not have the equity to refinance that property, and therefore you'll be stuck with that adjustable rate mortgage of whatever it ends up adjusting to. And so that's a huge problem for people in this position. And the only way that you can avoid this is if you're willing to put down a high down payment. If you can put down at least 20% or more on your home, then there's a high probability that you can at least avoid the situation where you won't be able to refinance in the future, because that's not a situation you want to find yourself in if you're getting an adjustable rate mortgage. But the average person only puts down anywhere between 5 and 12% on their home purchase. And so when home prices do fall, you won't have the equity to refinance and you'll be stuck with that adjustable rate mortgage loan. Now, since we're in Albuquerque, I thought it might be cool to cover a little bit of what's going on here in the market. And Albuquerque is one of these markets that's still up year over year. Their median home price is $322,000. Right now, Albuquerque is one of these markets that's considered to be about 30% overvalued. And if you saw my video yesterday about Flagstaff, that's still pretty good compared to Flagstaff. And you're starting to see listings over there are taking huge price cuts in the order of magnitude of over $100,000 price cuts, and the home's still sitting on the market. But over here, house payments are still about 44% of a typical household's income, and that is far above the long-term average of about 25%. But here's the thing, guys, when you go to get a loan, a lot of lenders will still push you into getting approved, even if you have a debt-to-income ratio of about 44%. A lot of times you can still get approved for a loan like that, and that's likely one of the reasons why Albuquerque is still a strong market. Now here we have another house for sale in the same neighborhood, just a couple blocks away. It's $430,000, and it's quite a bit bigger at 700 square feet bigger, so they're asking $100,000 more than the other house. But this one actually discloses the previous purchase price in March of 2023 for only $200,000. Okay, so this place is a flip, and they're trying to sell it for more than double that they paid for it just a few months ago earlier this year. Well, good luck with that. They've already had their first price cut. I don't know what this place is really going to sell at, but I'm willing to bet it's probably going to be significantly less than $430,000. We'll see. And the thing is, you also have extremely low inventory here as well, because back in 2016, for example, there was almost 4,000 homes on the market here. Well, fast forward to today, it's only about 1,200. So basically a quarter of what was available 7 years ago. And so when you combine the situation of low inventory with the fact that lenders will give you a loan even at a 44% debt to income ratio, it's enough to keep things going. Basically, it's enough to keep the magic show on the road, guys. Also, the fact that it's still quite cheap here compared to many other metros throughout the country, you could still see a lot of people from other places potentially move in here and prop these prices up even higher, because people are looking for affordability right now. And I would argue to say that a lot of people would consider a $330,000 home and a $2,400 a month house payment affordable compared to many other areas of the country. Now, I'm not saying it's cheap, but it's definitely doable for a lot of households compared to what you're facing in a lot of other areas. Even Flagstaff, guys, you know, that house we looked at yesterday, you got to be paying like $4,500 a month, when here you can just be paying $2,400 a month. So that's a pretty big difference. But you have to remember that it's still overvalued, even though. And home prices should actually only cost about $245,000 here, but it actually costs $330,000. So just because it's still somewhat affordable on a nationwide scale and it's below the median home price of the country doesn't necessarily mean that a place like Albuquerque can't see home prices come crashing down. Because I think we're going to be entering a period sooner than later where all asset prices are going to be reverting back to their average mean. You're going to see things return to the baseline of what it should cost at some point. But if I were to roll the dice and be buying a house right now, I definitely would feel safer buying a house in an area like this versus in Flagstaff, where the prices could potentially come down by a lot more. Because when you're talking being 43% overvalued like over there, then you're looking at potentially your home could lose half its value if things go south. Here it could still lose 30%. Now, another sign of distress that we're seeing with the economy in general right now is car payments. Right now, the amount of people that have a $1,000 per month or higher car payment is at its highest level ever. And it's not even necessarily because people want to have car payments that high. It's because of the combination of how everything has become more expensive due to inflation. In fact, 17.5% of people who are purchasing brand new cars today have a car payment that's over $1,000 a month. And 3 years ago, it was less than 7%. So that shows you how much things have changed in just a matter of a few years. I have no idea what kind of bird that was. I've never seen one of those in my whole life. But the reason people have these car payments is because of prices and interest rates, just like with real estate. Okay, you have the average cost of a new car at about $48,000 today, and a few years ago it was $39,000. Also, a few years ago, interest rates for a car loan were 4.6%. Now it's about 7.5%. But interestingly enough, the people that are buying these cars and having these $1,000 a month car payments are putting down a higher chunk of the down payment as well. The down payment average went from $4,000 to $8,000, so that's basically double. But the real problem with this situation is that these car payments are now taking up a higher percentage of people's incomes, because car payments are up about 30% higher than they were 3 years ago, while wages during the same time frame are only up about 15%. So it has to make you wonder, at what point do people start running out of money, guys? Because we know the credit card debt has hit an all-time high. You know, we have car payments now hitting all-time highs. The amount of money that car payments are taking away from someone's monthly budget is hitting an all-time high. Same goes for people's house payments. Like right here in Albuquerque, people paying 44% of their monthly income towards their house payment. How long can that go on for is what I want to know. How long can people keep spending this record amounts of cash and never run out? Because I don't think that's going to continue to happen for very much longer. Because when you see all these payments taking up a higher and higher percentage of people's monthly budgets, there's going to come to a point where there's no room left for growth for prices on anything, because people literally won't be able to spend any more. And I think we're already starting to see that with real estate. That's why the transactions are hitting rock bottom, and people who are getting mortgages are going for adjustable rates because it saves them on the monthly payment. But you know, the funny thing is, when I read this story, it says, so far the stress isn't showing in the economy because consumer spending is running at a rate of 18.7 trillion a year, and that is a record, and it's up 28% compared to 3 years ago. And for anybody who saw my video yesterday, literally it covered in there that the cost of everything has gone up about 30% within the last 3 years, and they're saying because consumer spending is up by 28% in the last 3 years, that means everything is right in the world, and that's why this economy is strong. No, guys, it's because of inflation that consumer spending is up 30%, because the cost of everything is up 30%. It doesn't take a rocket scientist to be able to figure that out. But yet they write these feel-good stories to make it look like and appear that the economy is doing great, when in fact it couldn't be further from the truth. People are just barely hanging on. People are being forced to spend this amount of money and forced to have consumer spending go up by 30%, not because people want to spend more, just like with the car payment. It actually just costs more. But that gets turned into a story of how the economy is doing great. So that's the state of affairs right now. It's always cool to see people in the holiday spirit. But I have a feeling that by now a lot of people who watch my channel are pretty well aware that these stories are basically designed to keep people spending and to keep people invested in the markets and to keep people buying homes. It doesn't necessarily mean things are actually going well. And knowing that can put you light years ahead of other people who think that everything is just going to go great and I'm going to keep spending like there's no tomorrow, because when tomorrow comes and those people are out of cash and you have your money saved and invested ready to go, you're going to be the one who wins. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.